Hello, welcome back to a new video here on the Tradeciety YouTube channel, and today I want to go over a very interesting topic. And after I've seen that so many of you like the idea of mental capital in the last week's video, I thought we will get more into this concept, and in this video I will show you how you can manage your losing trades the right way and why managing losing trades effectively will make such a big difference. Whenever I work with a student of ours or whenever we have a new trader, we can always or very often see that once we help the trader understand that he needs to cut his losses quickly, then he will usually have a very, very big jump in his trading performance. And many traders don't even realize that. But trading is not only about making huge winning trades, it is oftentimes more important that you know how to effectively manage your losing trades as well. So here's a very interesting market. This is the Euro Swiss franc on the daily chart, and we have been watching this for the past few months here actually, and a lot of traders get chewed up here in such a market. You can see that the price has been slowly moving higher here. Many traders, they are always waiting for a short reversal. They are always trying to get into a short trade, and without any clear signals here, they get chewed up, they get whipped around. And managing losing trades is so important because many traders will lose a lot of money in such a market where it just keeps grinding higher. And then once the market sells off, and if it sells off, that's still the question, but let's assume that it sells off at one point, many traders will have lost so much money in the market here previously that when the real sell-off comes, they cannot make up for the past losses, and what they then realize is that they have to take a huge position to make up for the past losses. And if then the trade does not work out, then they even have increased their losing position and their losses. So it is a very bad circle that they are in, a very bad cycle. And managing trades and knowing how to take a loss and how to avoid big losing trades is so important, as we often see when we work with our students. So here are now my best tips for losing the right way, how I can call it. And the first is a very important point. You have to realize that you can go broke taking profits. I know there's this quote that's circling around social media and even in trading books that it says you cannot go broke taking profits, but it is just not true. If you keep taking small profits, but you'll just let one losing trade get out of hand, then it is very easy to lose, even if you always take profits regularly on your losing trades, on your winning trades. Trading is not just about spotting and taking entries. Many traders will take the majority of their time, or spend the majority of their time looking for new entry methods, looking for better signals or indicators or settings on their indicators, a better time frame or whatever. I get dozens of emails every week where people ask about entries, and then I always ask them, how much time do you spend on managing your trades, looking at how to cut losses or how to stay in a winning trade and how to improve those areas of trading. And usually if I get an answer, then usually they say it's they don't spend any time on it. So I really recommend that you take trading or see trading as a whole. Trading is not just about taking entries, but it's a very complex activity, and taking entries is just one part of it. As I said, trading is not just about winning, but it is about knowing when you are wrong. So here are my top tips for losing better, and how you must approach your trading to be effective at managing your losing trades, getting out of them. And the first one is that you need to create rules for cutting unprofitable trades. You need to understand when is your trade not working out. Every trade, as I always say, should be seen as an if-then scenario. So if this happens, then I will do that. And you should have very specific rules for your entries. When do you enter your trades? But you should also have very clear rules for when to cut unprofitable trades. And in our course, when we work with our traders, we tell them early on in our modules how to cut losing trades, and this is a very important point. As I said, you need to know when your idea is not working out. It is important to always remind yourself that any trade is a potential or a hypothesis that you have. If, for example, you are entering a short trade on the euro Swiss franc, then your idea and your hypothesis is that you think there are going to be more sellers than buyers in the market, thus the price should move down. If the market is not agreeing with you, then of course your idea and your hypothesis is not correct. You are proven wrong, so you need to get out. And marrying to a trade is very a big problem, where people, they get then their egos attached to their trades. They want to prove that they are right. They don't want to admit to themselves that they are wrong, or even if they have posted a trade or shared a trade with other traders on social media or a chat group, then it's very often, you can often see the attachment that grows, and the trader defends his position. He gets really married and he gets really attached to the trade, so you need to be aware of that. Then always ask yourself, when is the market lacking momentum? So especially if you are a trend following trader or a breakout trader, then you want to get into a trade that goes with the momentum. And when you then are in a short position, for example, as we've seen on the euro Swiss franc idea, but the market is not going your direction, it is just either hovering, so moving sideways, or maybe even reversing on you, then it clearly shows that the market is not agreeing with you. So get out of the trade and move on. And also, if you are a trend following trader and you are looking for long moves, then you always have to understand, and you have to evaluate, is the price, or how high is the likelihood that the price is able to break support and resistance levels on its way, or if you see that the support and resistance levels are holding, what does this tell me about my trade? Maybe there are not enough people supporting my idea, the momentum is not with me, so get out of the trade as well. And if you can see that support and resistance levels are holding, it's usually a good tell for the market, and it can be a clue for you to get out. So now we come to the benefits of losing quicker and why it is so important to be able to lose effectively and to cut losing trades early on. First of all, very important, it is you are able to free up mental capital, which means that you are not attached to the trade. When we are in a losing position, then usually we blur out everything else. We are just focused on this one trade. We want to will it around, we want to help it, and we want to force it with our thoughts. We are so attached to it that we just hope that it will turn around, that we miss other trades, we ignore other signals. Even what I can often see is that when a trader is in a losing sell trade, then he's holding on to the losses, and he's completely ignoring that actually he's already getting a buy signal from his system. So he's holding his loss through the market phase, even though he should already be long, and he's missing out on the potential profits because he's just not able to close his trade. Then this ties in with the previous point. You can think clearer. You're not missing other clues on the market. You can be aware of your news items. Many traders will miss news when they are just too focused on this losing trade. It completely clouds their vision and clouds their thinking process. They miss their watch list, what they have written down. They miss price alerts maybe, and they miss other things on other time frames, and that is not good, because then in the end it reinforces this effect of losing. When you are in this big loss, then you don't close it, but at the same time you miss out on profits on other trades that you could have taken based on your system. Then it's just a vicious cycle where you dig yourself a deep hole, and it's very hard to get out. And then finally, you can trade more like a professional trader without hoping or wishful thinking. Many traders, when I ask them, do you really have the mindset and the approach of a professional trader, then often they have to admit, no, this is it looks more like an expensive hobby for them. They're not really serious about it. And one thing that I always like to remind myself of, whether it is trading, running your business, taking care of your health, doing sports, then always ask yourself, what would the professional do? So if you are in a business, then what would Elon Musk, or what would Bill Gates, or what would Warren Buffett do? And then compare what you are doing to the actions that the professional would do. And you can often see the big difference, that the professional would not act in certain ways. It is very clear that also in sports, the professional soccer player or the professional football or athlete, he would not engage in lazy activities. He would not just play a PlayStation for hours at a time. He would not eat the third or the fourth burger. He would go out and do the stuff. So it's always very, very clear. If you get into the mindset of the professional, you ask yourself, what would the professional trader do? How do my actions compare to it? And do I need to change? So that's always a good trick for the mindset, and it works quite nicely for me. And then here's a very interesting comparison. What can happen if you cut your trades just a little bit earlier? So this is measured here in R multiple. So minus R is a full loss where price hits your take profit. Plus 2 is a trade with a reward to risk ratio of 2 to 1. And let's assume here on the left we have a regular trader. He does not cut his losing trades, and he has some losing trades, some winning trades, a break-even trade, and then after a few trades he ends up with a profit of plus 0.5, which is at least it is profitable. It is not very much profitable, but I think it's very realistic to see such a trading performance. And I often see it when I talk to my students that they're just barely trading above break even. They're making some good trades, some bad trades, but they are not really able to cut their trades. And then once they get into the mindset of cutting losses just a little bit earlier, you don't have to get out of the trade right away. You can let the trade get into a loss a little bit, because you have to give it some time to play out. The market moves in waves, so you have to give it some time to see if it's working or not. But if you see that it's not working, just cutting the trades a little bit. Like here you have a 0.8 R loss compared to 1 R. You have 0.7. You have here 0.6, another 0.7. So you can see you just cut it 2/3 into the stop loss, or here 3/4 or a little bit more into the stop loss. So just barely cutting the trades and just cutting the trades a little bit ahead of the stop loss can improve the performance. You can see 2.0 R versus 0.5 over a very short sample size. Of course, that is just theoretical, but you get the point, I think. If you just get into the mindset of cutting the trades a little bit earlier, then it will make a huge, huge difference in your overall performance. And you will see this effect impact all areas of your trading, where you can trade with more confidence. You pick up new clues about price action once you get into the mindset of asking yourself, when should I cut my losing trade? What are the clues that the market is not agreeing with my trading idea, with my hypotheses? Then you can improve your price reading abilities, your price action skills, and your performance, which then increases your confidence, and so on and so forth. So I think that I hope it comes across that why cutting losing trades is so important, how it impacts your emotional state, but also other areas of your trading. And again, if you like the video, I would be thrilled if you can give me a thumbs up below the video. If you have questions, leave a comment below. And until then, happy trading. See you in the next video, and bye bye.